Welcome to the Remarkable Retail Podcast, Season 6, our season debut episode, presented by Marketile. I'm Michael LeBlanc.
And I'm Steve Dennis.
Well, Steve, I'm very excited about 2023 and the year ahead. We've already started the year off well. We've been renamed, I guess you could say, for 2023 to the Rethink Retail Top Retail Influencers list. So that's very exciting for us.
Yeah, I was going to say, not just us, but lots of our friends and colleagues. And I think I counted about, 25 folks on the list that have been guests on the podcast. So that's kind of fun.
And we're blessed to already have lined up a great roster of retail thought leaders ourselves for the podcast. And we're on the road together, literally around the world, to expand our reporting and insights. And our friends at Marketile are back as presenting sponsors for another season. So to kick off this season, we start where we must, 2023 predictions.
Yeah, it's become an annual habit of mine, or practice, I guess. I do predictions. And this year, I've got 12 main predictions. And then 3 bonus, more kind of long shot predictions. And because there are so many and we want to give service to each of them and have a little bit of a conversation, we're going to break this into 2 parts. So we'll do 6 this week and 6 more next week, plus the bonus.
Exciting. All right. Something different. We'll get to that a little later. Let's start with the news. We've been off for about a month and a half, a little bit of catching up to do. So we're not going to dwell on too much history, but what's top of mind for you in the recent news that you want to chat about?
Well, to me, a lot of things kind of are reading the tea leaves on where retail is headed. And I guess in the broader context of where the economy is headed, things seem to be slowing down. The holiday, in terms of sales reports, seem to be about what people expected, maybe a little bit on the lower side. We'll talk about a couple of retailers in a second. Inflation's still a factor, though starting to moderate. The thing that I think is just so interesting to try to figure out is, here in the U.S. anyway, the unemployment rate dropped to 3.5%, which is the lowest it's been in 50 years. There are a couple of other, to get into maybe some technicalities. There are a couple of other things that folks that know more about this say are things to watch, which is that the hours and temporary jobs have gone down. And of course, I'm sure many people are familiar with some of these kind of high-profile tech layoffs at Google, Salesforce, Amazon. But in the scheme of the whole market, they're actually quite small. So I think at least here in the States, the Federal Reserve is really counting on, frankly, some weakness in the job market to help bring inflation down. So we'll see where that goes. Getting a little bit into a couple of specific retailers that shared some information over the last few weeks. Probably the biggest one was Macy's, which was, they were spending a number of months, I think, when we talked about this multiple times on the podcast, talking about, we're managing our inventory so well and things are on track. And then they came out and warned that actually the holidays were looking a little bit softer than they were anticipating. And they also announced they're going to be closing 4 stores, which is not huge in the scheme of things. Lululemon and Chico's both warned more on the margin side, which is not too surprising because we know about the excess inventory levels. And so they're going to have to mark down to move some of that through, even if the overall sales pace isn't exactly what they want. But then, on the other hand, you had American Eagle and Abercrombie and Finch guide up, saying that things were better for them. So it's kind of a tale of 2 cities, maybe. I don't think we're really going to know until we start to see the quarterly earnings reports. Like, it's one thing to look at sales. Sure. It's another thing to understand the profit picture. And I don't think, other than the Lululemon warning on margin, we've got much insight to that.
Yeah, it's interesting here on this side of the border. We were heading into a pretty good week prior to Christmas, and then we had either bad weather or the threat of bad weather, and it really ground sales to a halt. And I haven't seen the numbers yet for the Boxing Day week, the week after, where it was good weather. So maybe there's some pent up demand, but generally we're seeing. I think we're seeing the results of a beginning to or a continued shift to experiences versus buying. And I think it really aligns to, I'm going to buy something that's remarkable or something I really need, or I'm going to go stick my toes in the sand and travel. So we'll see how that plays out for the course of the year. All right. So we've talked about a couple. Let's talk about Bed Bath and bankruptcy.
Yeah.
I think we're they seem to be, when they start saying bankruptcy is a strategic option, I think that's a one-way ticket to Palookaville. But what do you think?
Well, just a string of bad news that started, I guess, a few months ago when Mark Triton left. I guess some people may think that's good news, I suppose. But no, they reported their sales down. I can't even remember the number, 30-something%. I mean, it was a terrible, terrible number. Laid off some more people, talking about more store closings. All signs seem to be leading to a bankruptcy filing. And I think most people think that this is a brand that's not going to be around, that bankruptcy is going to lead to liquidation, which is just, it's pretty amazing how far some of these category killers have fallen, which is probably worth a whole separate episode. We've also got Party City, which is not, nearly as big a retailer, but kind of another superstore category killer type player that also looks like they may be filing. And I think also the speculation is that they may not make it out of Chapter 11 either. So we'll talk about this more in the predictions in terms of the collapse of the middle. But I think, these are troubles that have been brewing for a number of years, arguably exacerbated by some management moves. And, it's hard to do a turnaround when the economy is a bit shaky as well. So a difficult road ahead, I think, for both these brands.
Now, on the other side of the coin, we see some growth, right? Talk about Five Below.
As much as we do see lots of retailers getting into trouble, there are plenty of success stories. And I think maybe we don't lift them up quite as much as we should. But Five Below, which is a retailer that has been growing quite dramatically over the last several years and posting some pretty good results, they had some big news. First of all, they are going to convert more than 400 stores to this newer format they have, which is called Five Beyond, which is kind of an upscale version of the Five Below stores, which are, much more kind of in the dollar store-ish territory. So as well as just continuing to build new stores. So strong growth story there. They also had their sales up 11%. So, we've been talking about the last several weeks, some retailers or just kind of the general holiday period being up, maybe more 6 or 7%. And maybe a lot of that is inflation. Well, here's a retailer that's clearly performing quite a bit above that rate of inflation. So I think it's a brand that's definitely gaining market share. So really cool story. And they kind of, came out of nowhere, got on my radar screen a few years ago. Hadn't really heard much about them. And now here they are kind of moving up the ranks of best performing retailers. So
big news out of China. I mean, really big news out of China, where they've abandoned, it seems, wholesale, the zero COVID. And now you've got an entire nation with, rampant COVID outbreak, but it does mean that they're opening up the borders and the Chinese are going to start traveling again. I see a couple of impacts. What do you make of all this?
Well, first of all, it's an extraordinary turnaround, right? I mean, they seem to be really doing this grand reopening. And so that, I think, both impacts, though a lot of these issues have been addressed, some of the supply chain stuff. It means, yes, more Chinese tourists, which has been important. China is a huge market for many luxury fashion brands. And so that, I think, will have a significant impact on many well-known and not so well-known brands. I think one of the things that's going to be interesting from a macroeconomic perspective is this good or bad for inflation? And I think the answer is probably that it really depends on which kind of categories you're talking about. I mean, the demand for gas, the demand for construction materials, so those kinds of things could have an inflationary impact. But, the supply side of it could also be favorable for taking inflation down. So maybe we should get an economist on to talk about this. I don't know, just an idea I'll throw out there.
Just an idea. How about the global leading economist from Deloitte?
We could.
We'll see. All right, let's take a walk over to the Wobbly Unicorn section. I think I might have to come up with a new soundtrack because I think they're getting a bit wobblier. Maybe this one. Maybe that one there.
Or maybe a thud of no, that's too negative.
No, I don't think it'll be that negative. But what's going on? There's lots of news coming out of some unicorns, and not much of it's great.
Not to do a spoiler, but we'll talk a bit more about this in the predictions. But several high-profile disruptor brands. We call them wobbly unicorns because they many of them were previously valued in the unicorn range or greater, have continued to have problems. So Stitch Fix, which we talked about maybe a month ago, they have even more layoffs. They booted their CEO, who hadn't been there too long, and the founder, Katrina Lake, has returned, and they look like they're really struggling to figure out how to move forward. Everlane, another brand, we talked about them, I think, also not too long ago because they did some additional fundraising, but they are now also engaged in some cost-cutting and layoffs, pretty significant, I think close to 20% of their staff. And then the Morphe makeup brand, when I originally put this on my little list for the news, it was going to be talking about their decision to exit the physical stores in the U.S. market. They had about 20 stores in the U.S., and they've been expanding. You know, another one of these digitally native brands that was moving into physical retail and had a bunch of high-profile locations. Well, they announced they were closing all their U.S. stores, which gives them still a few internationally. But then just, I think this morning or yesterday, they announced that they are filing for Chapter 11. So their future seems very much up in the air. Boxed, which is also a direct-to-consumer brand that sells household essentials, they've been struggling as well with profitability, and their sales growth, I guess, is flattened out. So they have decided to pursue strategic alternatives, essentially putting themselves up for sale.
You know, I love that code word, pursuing strategic alternatives. That's the same code word as spend more time with the family. The two, I put the two in the same category.
Yes, exactly. Not a rosy picture for several of these brands, all of which I think were valued north of, in fact, Morphe was valued, I think, in their last fundraising round at $2 billion. And so I'd say they have fallen a bit from that lofty perch.
MarketDial's easy-to-use testing platform emboldens great decisions, leading to reliable, scalable results. With MarketDial, you can be confident in the outcome of your in-store pilot initiatives before rolling them out across your fleet. In a challenging retail climate of supply chain disruption, labor shortages, and dynamic customer behavior, the need for reliable insights has never been greater. Validate your remarkable ideas with MarketDial's in-store testing solution. The proof is in the testing. Learn more at marketdial.com. That's marketdial.com. This is actually one of my favorite episodes of the year because I get to, we get to chat about it. I get to hear how you're thinking about 2023 and the year ahead. I'm sure both of us are asked many times, what do you think? What's the predictions? And I wanted to start by asking you a bit about your tradecraft. Like when you sit down and say, okay, what are my big picture assumptions from which I will draw, some detailed 10 things that I think are going to happen? Like, what's your tradecraft? How do you come up with predictions, and what's your starting point?
Well, I guess the two main things I do keep a running list of ideas, not just for predictions, but I have some notes that I take to kind of remind myself of ideas that I might want to research more or explore more or what have you. So I will say that I read other people's predictions. Sometimes helps me think about a topic maybe that I hadn't thought about as much, or just hear other people's perspectives. And, sometimes I agree, sometimes I disagree or have a different take on it. Those are really the two major paths. And then I try to go through and, boil them down to about a dozen that I think cover a range, are hopefully not just what everybody already thinks. And then I'm also like, well, I don't want to include some things that might make me look like an idiot at the end of the year. But as we know from our last year, that does happen. So not all of them are guaranteed to be true. So buyer beware.
All right. Well, let's start with some of your assumptions as you sit back and look at the different things that are happening. What are some of those initial assumptions that you're starting to talk about? We alluded to some of them, or some of them are certainly framed in our news. But give us a kind of a quick overview, and then we'll dive in.
Well, I feel big picture, and I saw somebody else actually write about this idea that retail, the industry, retailers are coming into 2023 with a bit of a hangover. But things like excess inventory, still a lot of, we talked about the low unemployment, but, continuing labor challenges, the wage pressure, and just difficulty in many cases finding qualified people. I think the other thing, which is maybe a weird thing to say in some respect, is, a lot of retailers were able to report pretty good sales increases that were mostly driven by inflation. So, if you had a 9% sales increase, well, how much of that was really because you performed well? Or how much is that everybody's prices were going up and you kind of held serve? And I think that inflation smokescreen is starting to clear. The degree to which it will clear as we go throughout the year, that's above my pay grade. But I think we are certainly in a place where we're going to have inflation, more like 5 or 6% perhaps, as opposed to 8, 9, 10. And then I think just in general, and I know we've touched on this a bunch of times, and frankly was kind of the centerpiece of our trailer for this season, is that the tide is going out, that it's going to be a tough operating environment for most retailers. Demand is generally slowing, pockets where that isn't true, certainly. You alluded to earlier in the episode, this shift away to services from products, more experiences, tech, travel, going out to eat, that kind of stuff, entertainment. Interest rates, are up 4 to 5% from where they were just a year ago, and look like they're probably going to go up a little bit higher at least. And, that puts pressure on the housing market, people that are financing big ticket purchases. We are, and was one of the things that also was reported as part of the holiday news, was that was quite a lot of consumer borrowing over the holidays, more than we had seen in a while. And so I think some continuing pressure on balance sheets as we go forward. And, with interest rates going up, that tends to exacerbate that. We talked about China. Is China good or bad for the outlook for other markets?
Yes.
Yeah. I think overall, probably yes.
Yeah.
And whether that their opening will persist, right? I mean, right now it looks like they're on a wide open trajectory, but will something happen where, the back half of the year they revert back? So just a lot of volatility and uncertainty.
China is one X factor. The other side of the world has another big X factor that could prove very destabilizing in some way, shape, or form. So anyway, strength to the people of the Ukraine. Here we go. Let's get into it. Number 1, what's your first prediction?
And I will say my caveat is that, actually I'll say 2 things.
Okay.
One is these are in no particular order. And, but also I did learn from my predictions from last year to try to be more specific so we can actually decide whether I got these mostly right or not. Anyway, the first one is that physical experiences matter even more in an increasingly digital world. And I don't know if this is a prediction as much as a strong observation, but the reason for this is you really have to demonstrate a reason to go to the store, which maybe seems obvious. But if we look at troubles at places like Bed Bath & Beyond and Party City, part of what happened is, what made them successful 20 or 30 years ago was that it was a great destination for all things home or all things party or whatever.
Right.
That started to become a disadvantage as you could buy online, but also you could get many of those products at plenty of other places. Yeah. So if you're going to invest in and maintain physical stores, what is that powerful reason for them to exist? So I think as much as we talk about stuff moving to digital, I think it does create this opportunity, though, for those brick and mortar retailers or brick and mortar dominant retailers to really create something special. So it's not about, stores don't matter anymore, we should be closing stores, we should not be investing in stores. It's actually perhaps the opposite if you've really got a reason for being. If you don't have a reason for being with your stores, I think the lesson that we're seeing, and we'll talk about this a little bit more with another prediction, is you're going to be in a lot of trouble. But the other thing, too, I think is we've seen the cost challenges or the profitability challenges related to the cost to serve from e-commerce is that physical stores are often, and we talked about this in our episode last week that we released on hybridization, stores are often a way to get those returns down, to lower the cost of fulfillment, to have advantages over Amazon and other pure plays, and create an experience that isn't easy to replicate in an online environment, even if the metaverse starts to become a thing.
Well, and it also, I think, builds on the whole idea of one of our most popular episodes last year, the buying versus shopping, right? In other words, you were making that point, which is articulated here is listen, if there's no value add, as you said, and if I can get it online and it's the kind of good that I don't really care who I buy it from or maybe even the brand, then, why go, right? Because why should I go shopping? All right. Speaking of stores and connected to that, number 2, C-suite changes to accelerate. Talk about that.
Well, we did at the end of the year see a number of C-suite changes, and I was asked, and I got quoted in an article on this topic,
I saw that.
why that was occurring. And I expect the underlying reason is going to be what we see even more of in this year. The reason I think that we will see quite a lot of changes, and also the second part of this prediction is that the type of person that's going to get hired will start to be materially different, at least in a number of cases. So I think kind of the obvious reason is that there are lots of retailers that are struggling. I think the patience on the part of boards or investor groups is starting to run thin. And because of the broader challenges in the economy, even more retailers are going to report weak results. So I think just the kind of macro factors will tend to push boards to look at making some changes. That kind of always happens. But I think the sort of broader trend is, and maybe this is more hope than prediction, is the realization that what it takes to transform a retailer today requires a different set of skills than was kind of the classic profile for running a retailer. I think both of us have had the experience of the kind of classic profile for running a retailer is either a merchant or a store operator. Those are still very important skills, but in this blended world, in this digitally led world, in this, data-driven world, the impact of technology is just radically different from what was historically important. And so I think a lot of boards, the savvy boards, frankly, are going to be looking at more diverse experience, kind of a more
diversity in general
approach. Hopefully. And more diversity in general, hiring people that bring different life experiences, but, in many cases look or understand the customer base better. So whether that's more women, LGBTQ, different ethnic backgrounds, et cetera, I think those will all be important. And I also think, last part of this is, and I would encourage plenty of retailers to take a look at this. Maybe you bring somebody in from outside the retail industry. We just saw Under Armour hire the president of Marriott to come in to be their new CEO. And, we'll see whether that turns out to be a wise move. But I think, when you're in a world that is with brands that operate more as platforms, which have this digital component, this guest experience component, do you need
media, retail is
media, there's so many different parts to what makes a retail brand successful today, and even more so what will be true in the future. I think a very different set of skills and perspective will be important. So like I said, this may be a little bit more hope than actuality, but I do think we'll see a lot of changes just by virtue of the economic pressures, whether it's more the ideal profile for a transformational executive changing a lot. That one I feel a little bit more out on a limb.
Right. Number 3, disruptor reset. Is this connected to our unicorns? What is this about?
Yeah, and maybe this isn't even too aggressive a prediction because we saw so much resetting going on in the retail disruptor space. So largely these new DTC or digitally native vertical brands, that whole, the Warby Parkers, the Allbirds, et cetera. I don't see a good trajectory for most of these brands, that many of the issues that they experienced during the past year will probably only be exacerbated. Many of their balance sheets are weakening, so their ability to raise funds at an attractive rate is not likely to be too great this year, at least for most of them. And, with the economy slowing down, they're not going to get any favors from, sort of the rising tide. Many of the brands that find themselves in trouble, like Stitch Fix and Real and, kind of go down through a list of them. Some of them we mentioned earlier in the episode. Many of them have been at this for 10, 12, 13 years.
And they were good years for growth for retail, too. And
correct.
Notwithstanding COVID era weirdness.
So I think investors and boards here are going to be like, maybe it is time to really make some big changes. So I think several high-profile founder, CEO types will get the boot. I think we're absolutely going to see more cost-cutting moves, greater focus on getting the marginal economics and the customer lifetime value. We've started, I think, to see more focus on that. Dan McCarthy has been on our episode and just made the Rethink Retail list, deservedly so.
Welcome, Dan.
Been all over this. And I also think that there's been so much of an emphasis of the last couple of years, and this is probably an ironic thing for me to say, but that these brands were opening all these physical stores, and that was their their growth strategy now. A lot of the attention was being turned to that. My sense is many of these are not. I mean, we just had that story about Morphe closing all their stores. I think it's going to become clear by the end of the year that some of these expansion strategies, or at least the aspirations of these expansion strategies, not really working out, and there will be a slowdown, or closings. But I think the big thing will be consolidation. That some of these brands, which have established a good customer base but not a path to profitability, will get acquired. I think some, unfortunately, will go the bankruptcy and maybe even liquidation route. Others will have a big shift in their strategy, and started to see the beginnings of this in terms of more wholesale, or maybe, I don't know, is Warby Parker going to open up, stores within a store at Macy's or something like that? I'm not specifically predicting that, but I think there may be different ways to get more rapid revenue growth with a lower investment and easier cost of operating. So I think lots is going to happen in this space this year.
Number 4, retail media networks grow fast but start to experience growing pains. I'm with you on this one, but expand what you're thinking there.
Well, it's not a very bold prediction to say retail media networks are going to be a bigger thing this year. I mean, there's so much momentum here and so much growth.
So much money at stake. A lot of money at stake too here.
Ton of money. Amazon now famously growing very, very rapidly, huge business, making lots of money. Plus we've got, some of
Walmart
traditional players, Microsoft getting into the game. Most big retailers have announced aggressive plans here, smaller retailers starting to do it. So I think there'll be plenty of activity in terms of new networks and just the growth in some of the ones that are already in play. There's still a lot that's got to be worked out in terms of the balance between selling ads and selling your products, right? That, if you go, for example, to the Amazon webpage, probably the easiest one for people to relate to, there's a lot of clutter, I would argue, in terms of the things that are being promoted. That part of the business is very profitable, whereas selling stuff seems to not be so profitable at Amazon. But you don't have that same picture at every retailer. So the more you push interruption marketing, to use Seth Godin's phrase, to the forefront, because you like that margin, you potentially do that to the detriment of the overall customer experience and the reason that they come to your store or your website in the first place. So I think this tension is going to become more obvious the more growth we see. Also think that what it takes to actually operate these networks is pretty complicated. You don't have organizations for the most part that are used to this. You have different departments that have to cooperate. It's a really different mindset in terms of the merchant store operation machine. So I think we'll see some growing pains, and perhaps this is not going to have the trajectory or the momentum that is as great as some folks think. But it's still a growth area for sure.
On that last point, super interesting, because on the one hand, they're selling pitch. I mean, the big pitch is, listen, you don't have to start a whole division like a behemoth like Walmart or Amazon. It's all in the cloud, but it still doesn't eliminate the organizational challenges. And, listen, you've been on both sides of the table as well. When a vendor says, hey, guess what? Great news. I'm going to put, 50 million of my Facebook buy into your media play, but then the next quarter says, well, no, I'm not going to do that anymore. Then that's a very different conversation that's going to happen with the merchant. And what do you mean you're pulling that $50 million out? I thought, you know what I mean? Like there's a lot behind all this stuff, co-op and all that stuff, right?
Yeah. Well, my example, which perhaps is not, the strongest one, but I said, it's taken more than 20 years and retailers still haven't figured out this omni-channel stuff. Now you're introducing another thing into the mix where departments have to get along with you. I mean, you still have to figure out what's on the homepage and how all this stuff works and how people get paid. And so it's not trivial as much as, there's lots of people working on this area and a lot of money behind it. So I do think it's going to turn out to be more complicated at the scale that people are talking about.
So number 5, you're thinking big changes coming at Amazon. That's a bit of a slam dunk for you on this one because they're always changing, but I'm going to hold your feet to the fire on this one. It's like every day there's something going on Amazon. But I mean, I almost label this, WTF Amazon, because I think it's so hard now to figure out what is going on, other than Mr. Jassy seems to be getting very serious about the profitability side of the business and reviewing
quite a few things. Don't think we're going to see anything tremendously different within the advertising business or the cloud business. I think most of the action here are the things that touch the retail flywheel. E-commerce sales, which have really decelerated, their distribution capacity, they've been trying to rationalize that, I guess is the nice way of saying it. We got a lot of news about Alexa basically incinerating cash, or the voice commerce division, which includes Alexa incinerating cash. And their physical retail portfolio, which is mostly Whole Foods, has been performing poorly, even though we don't have a good breakout on that. And, they closed some of their experimental stores. They've been slow rolling Amazon Go. And, I really thought, to go against a prediction I made a couple of years ago, that they were really going to go full bore into apparel and grocery. They seem to have put on hold the opening of additional grocery stores, and some of the ones that are already built have been sitting there with their lights off for months. I don't know whether that means they might be backing out of grocery, but I certainly think it suggests that they're going to go about their physical retail strategy in a different way, because it does appear that it is not working. I think we will see some bold moves on the retail side to improve focus and performance. What exactly those will be, hard to say, mainly because, there isn't good visibility into their performance, but we can kind of back into it and say, it must not be good. And, they've been at Whole Foods and some other things for a while.
On the leadership perspective, do you think they're going to Howard Schultz it there? Do you think Bezos might come back into the picture? There's some chatter about that. There's some chat. I don't think it's going to happen. It's a very different situation, but you put any credence to that?
Not only have outsiders been speculating it, but there seems to be some movement, I guess, within the buildings to bring them back.
Golden era, get Jeff back.
Yeah, I would be surprised. For a bunch of reasons, but I don't know personally any of the players involved, so it'd be pretty big speculation on my part. But
from outside in, Bezos still has this. He's still involved. There's a lot of these big decisions. I can't imagine he's not informed of, or so I don't think he's on the outside looking in. I think he's part of. I think he's in agreement. But it's interesting, right? We saw new leadership at Disney and then get tossed out. Not long after taken over with the prior leader. So it's not like it hasn't happened before. So anyway, that'll be one to watch.
Well, I do think, I guess the one thing I'll speculate a little bit more on, I do think the investor pressure is generally speaking not for bringing Bezos back. I think that there is the, split up the company pressure, do a spin out kind of thing.
AWS.
That I think could happen. The pressure to improve performance at the underperforming divisions is the thing that will drive the stock up at this point. I don't think it's going to be, let's have a bunch more moonshots and lose another, gazillion dollars for 20 years. Like that
literally and figuratively.
Not workable to me. So I think, this idea you'll bring Bezos back and that'll be some magic. I think that's fantasy.
Now, number 6, the collapse of the unremarkable middle picks up steam. My recollection is this is a repeat type prediction. But you're confident that this could be the year. And to be fair, the COVID era disrupted a lot of things and in some ways slowed the role of department stores where they mattered a little bit more. But you think that...
Yeah, well, so, this isn't just about department stores. This is really, any of these brands that are kind of stuck in the middle, the so-called bifurcation where value retail, dollar stores, off-price, hard discount grocery, et cetera, is performing really well. And then luxury and no more kind of affluent specialty stores are performing well. But everybody in between is losing relevance. And that has been a long-term trend. It's something I started writing and speaking about over 10 years ago. It has a big part of my book. We've covered it some on the podcast for sure. But what happened... not that there haven't been problems, because we just spoke about Bed Bath & Beyond and Party City. So there clearly have been some issues in the past couple of years. But I would say in general, the distorted discretionary income, because of stimulus payments and because people weren't spending money on commuting to work and going on vacations and all those kinds of things, I think it masked some of the pressures on some of these underperforming retailers that the ones that would have gotten into more trouble kind of got a little bit of a lifeline, or their problems got kicked down the road. You also had a very low interest rate environment, so the cost of financing to keep these businesses going was better. So now we are in a higher interest rate environment, though not sky high interest rates, and it looks like we're going into slowing consumer demand. All of this is still against a backdrop of, at least in the U.S., a lot of excess capacity. So it's really the mix of retail that is what's interesting. But fundamentally, we still have too much supply chasing too little demand. I think, whether we're talking about retail chains that are stuck in the boring middle, unremarkable middle, or we're talking about shopping centers, which have the same kind of issues, I think we're going to see a lot more pressure, whether that's store closings or bankruptcies or, repurposing, particularly in the case of malls. It's just, that's a little bit harder because of the cost to repurpose a mall is not trivial. And when interest rates are going up, it might be more difficult to finance. But yeah, I think the little reprieve that we saw for the last couple of years in terms of more store openings than closing, I think by the end of the year that equation is going to start to reverse.
All right. Well, that's your sixth prediction. And as we said, we're gonna take a stop there, and we're going to continue in our next episode with the rest of the predictions, plus your baker's dozen, so to speak, special bonus predictions. So for now, let's leave it there. If you like what you heard, please follow us on Apple, Spotify, your favorite podcast platform, so you can catch up with all our great interviews, including Organized for Growth, our interview with Satish Mahatra, CEO of The Container Store. New episodes of Season 6 presented for another season by our friends at Marketile will show up each and every Tuesday. And be sure and tell all your friends and colleagues in the retail industry all about us.
And I'm Steve Dennis, author of the best-selling book, Remarkable Retail: How to Win and Keep Customers in the Age of Disruption. You can learn more about me, my consulting, and keynote speaking at stephenpdennis.com.
And I'm Michael LeBlanc, consumer retail growth consultant, keynote speaker and producer, and host of a series of retail trade podcasts, including this one. You can learn even more about me on LinkedIn, and you can catch up with Steve and I in person at Shop Talk in Vegas, March 26th, and a month later in Barcelona at the World Retail Congress, April 25th. Until then, safe travels, everyone.